Well, the futures trade is off and running. Let's take a quick look and see what the first quotes are on the corn and soybeans and wheat. Let's go to corn right now in Chicago and take a look. All right, now that we have the futures trade open, here's a look on the follow-through firmness we're seeing in the corn. We have May 1.5 higher at 369. Check that. Now a penny higher at 368.5. And new crop December now a penny higher at 390 3/4. How are the soybeans opening up today on the first day of spring? Well, we have the May contract 6.5 higher at 1006.5. And now you have November trading 5 1/4 higher. Last trade 998 3/4 here. On the wheat trade, let's take a look there. On the wheat, we have the May contract a penny higher in Chicago at 437 1/4. July up 3/4 at 452 1/4. On the Kansas City market so far today, we have the May down 2 3/4 at 450 3/4 per bushel. We have new crop July down 2.5 at 462 3/4 per bushel. There have been a bit of rumblings around about potential moisture for the southern plains, I know. On the Minneapolis wheat trade this morning in the spring, we have the May contract 3 1/4 higher. 552 1/4 is the last trade per bushel. July new crop 4 1/4 higher at 558 1/4. And in the cotton market, it's opening up on July now 11 points higher at 79.49 per pound. New crop December up 3 points. Let's go to the phones and bring in Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. Dewey, happy first day of spring to you. How are you doing today?
Oh, doing well. We're going to have a little bit of a warm-up here. We got guys, a little bit hard to reach. They're trying to get things wrapped up here so they can start planting corn here maybe toward the end of the month, first part of April.
So the corn traders this morning had a little bit of a bullish surprise when USDA announced 132,000 tons of corn were sold to South Korea for the current marketing year. That's the first batch that we have announced here this week anyway. So do you think that is weighing in there in adding to that boost in the corn this morning where we're a penny or two higher?
I think it's certainly helping. There's another couple of reasons, too. One is that the funds last week flipped from a long to a short position. They're short about 125 million bushels, and generally speaking, they usually have a little bit of a long position going into the growing season. And, secondly, here we are getting close to the growing season, and also we're getting closer to that March 31st planting intentions report, and the markets, generally speaking, are a little bit oversold.
So this far ahead of that report, do you think the trade is already trying to play that report and outguess USDA on what those numbers will be?
Oh, I think they've been trying to do that for the past couple of weeks here. The trade has been looking to see what that corn-soybean price relationship has been and been just taking positions, according to what it has done.
Soybean trade 6 1/4 higher. Is that a function of just being technically oversold or a lackluster trade here recently?
I think it's a lackluster trade for the most part. We did see the funds lift or get out of about 180 million bushels of their position last week. So looks like they may be coming back in here and intend to replace part of that position.
So what are you hearing from South America? It sounds like harvest is going along without much of a problem.
Yeah, as of last week, it was about 56%, and from what I hear, the production numbers just keep getting a little bit higher and higher. I've heard one which Brazil might be looking at 111 million tons in production.
Okay, Dewey, sit tight if you don't mind. I'll bring you back here in a moment, and we'll analyze first trades on the livestock side as well. Our guest, Dewey Strickler of AgWatch Market Advisors. Don't go anywhere. We'll be right back. Before we start talking about the livestock trade, I want to look in here on the U.S. dollar index and see how it's firming up this morning or losing ground. And today, it's actually down about 60 points. Very quiet on the U.S. dollar index front. June futures now at 100.050, so now it's down 70 points on the day. The crude oil market is a little bit noteworthy here. We have April now down 60 cents on West Texas crude. It's at 48.18 per barrel. So a little weakness here. Once again, it did dip down below $48 in the early hour trading today. Our guest is Dewey Strickler. He is with AgWatch Market Advisors in Franklin, Kentucky. And Dewey, I know you watch these outside markets for influence here, but just real quickly, is the dollar having much of an impact here on the grain trade or livestock trade this week?
Oh, I don't think it's having a great deal of impact right now, Marlon. I think those markets are trading their own fundamentals and merits here for the moment.
Okay, let's look at our live cattle open and our feeder cattle open, see how things are doing. Right now on the April live cattle, we're 47 lower at 118.85 per hundredweight. Goodness, we had it high already of 119.48, and that didn't last very long. They came off of that by about 60 cents already. We have June down 25 at 109.42, August down a nickel at 105.40, so the most pressure on the nearby months. Feeder cattle trade, now we have the nearby March contract down 60 at 130.72, April down half a dollar at 131.12 per hundred, and the May down 38 cents, right at 130 even. Your first thoughts on this cattle market as you see it coming out of the gate here this morning with a little bit of pressure here, Dewey?
Yeah, a little bit of weakness. The cattle market was up about 3 days last week. I think you're seeing just a little bit of a technical pullback, but when you look at the contracts like the June contract, it's about an $18 discount to the cash here, so that's going to keep support in this market here. And I think cattle basis the April may get a shot here to go up to about 122, 123 level.
All right, so when you look at your technical indicators that you watch, where are they right now? Are they fairly neutral, or where do they stand?
No, they're pointed higher here. We are getting into a little bit of an overbought area, but it's nothing of great concern for the moment.
All right, good information there. So let's take a look at our lean hog trade this morning to see which direction it's going. It had a kind of a sour close on the last half of last week, where we had a sharp rally early in the week, but everything went south after that. Right now, it's mixed this morning. April lean hogs down 27 at 68.78, and we have May 6 higher at 73.68 per hundredweight, and June up 3 at 77.35. This hog trade, just the inverse of what you have in the live cattle market, where you have the nearby April at a discount to the July. It's actually undervalued by about what would that be? $8, $9, I guess.
Yeah, that's right. Of course, the trade is expecting to see second quarter production to increase here. And that said, I would look for the April contract more or less stay in a trade range. We've been down, let's see, going on about 4 days now. So we're due to get a little bit of a bounce in the hogs.
All right. And Dewey, how do we find your trading university that you have online?
Okay, it's AgWatch Grain Market University. This is a program in which we teach the basics of Elliott wave analysis, candlestick charting, use of technical indicators, price bracketing, and seasonal indicators. And you can go to my website, agwatch.biz, and purpose of the program is to improve your profitability and bottom line.
Sounds great. Thanks, Dewey. I appreciate it very much. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. So now we have everything up and running. We'll see how they go from here.
Yeah, his grain university really sounds interesting as well. I need to sign up, get schooled. Okay, thank you so much, Markets Editor Marlon Bowling.